Deal surgeons, elite masterminds, what's going on? This is Diamond Life. This is a review of Glitch in the Matrix. This is bittersweet. I identified where the glitch was over the weekend, like always, but man, let me explain what happened. So let me go to the 4 hour chart and let me take out these annotations. Man. Okay, so if you understand how the structure works, and I do, but it's something I didn't see here, and maybe somebody else watching the video can make a comment. Uh, I'm not gonna get mad. You could be watching this 5 years from now. Just tell me what happened. I'm gonna identify what happened. So this is a bearish breaker, okay? So price was here. I thought price would probably come up to here before the drop because that's what usually happens. Um, Usually it takes out a low, so it might come back up here now, or it probably will definitely come back up to this bearish breaker right here. But basically, on Sunday, which is where I did the analysis, this is all I saw, which was here. All I saw was this big spike. Okay. So the right here is the only thing I saw. Uh-oh. So what I thought was price would come up to here. Based on the way the glitch works, the numbers showed that it wouldn't come up here. See, this is where the confusion came in at. Let me go to the daily chart to show you what I saw. And it's going to look different on this broker. I may have to go to a different broker as well. Okay, this doji right here, this doji candle. Maybe when I go back and take a look, it would have showed me, but basically the draw on liquidity, I had it wrong. This was a S1. Well, you guys don't know what that is, but this is what I call a S1 draw on liquidity, which means a structure one draw on liquidity. It was down here. But let me show you what I mean. On some other brokers, the candles was different. On some other brokers, I seen that price close went below here, but failed to close below. So I guess it depends on what broker you're looking at. But based on this broker, I would have known that the draw on liquidity was down here and it wasn't up here. But when I looked at, let me see if I can go to a different broker and show you what I mean. It's that bullshit. All right, quick. Okay, let's go to Black Bull. Okay. Now here, usually the way it works on the draw on liquidity, price went below this low here, but it couldn't close below it. So the draw on liquidity would be here. But be honest with you, based on how huge this candle was here, usually the draw on liquidity, that's true. The draw on liquidity would be down here. But if it's a huge candle like this, in my own analysis, usually price won't take out the draw on liquidity because it's such a weak candle. So I should have known based on my own analysis that the draw usually is 25% or 50% of the wick. Okay. Because if you understand ICT draw daily bias, which I've studied a lot, if price comes below this low here, which was Thursday, it went below it, and then when it failed to close below it after it went below it here. See this? So when it closed up here, the draw on liquidity, which is structure draw on liquidity, I call it a S1, is usually up here. But based on the way this candle closed, and is based on how strong this was here, I should have known that, and even in my own analysis, that the draw on liquidity was not going to be up here. It's going to be 50% or 25%. It's going to drop. And that's exactly what happened. Okay, so this is Black Bull. This is a different broker. So let me go back to FP Markets, where I was originally at. Yeah, you see here, that's what I'm saying. Sometimes you gotta look at these different brokers and have different brokers up. Because look at this shit. But you know what? Looking at the different brokers, should have told me something as well. Because this told the true story. Because see, if all I would have saw was this here, then I would have known that price was still inside of this momentum because this candle was still inside of this candle and it closed bearishly. So I still would have known that the drawn liquidity would have been here. And if it did retrace, it probably would retrace the consequent encroachment, which is 50%. Let's just take another look at another candle real quick, because this is really upsetting. I'm trying to show you guys how the brokers have different damn candles running game on people. You have to look at the different candlesticks. Even here, it went below here, but it didn't close below. Go to another one. Here again. Now, another thing is I thought price would come up to here. This is kind of probably foolish on my part when I look back on this later on, but I thought the drawn liquidity was definitely up here because it went below this low and didn't close below. It closed above it. But I should have known better. Usually if it don't close above 50% of this candle here, then the draw, you know what? That's what it was. That's what it was. Because I've studied this. Man, this just don't make no sense. Usually if this is a S1 drawn liquidity right here, which it was down here, if the next candle, no, this is an inside candle. Usually if it closed, I should have thought the draw liquidity would be above the high up here. If this white body right here would have closed above 50% above this body here, then the draw would have been, let's say the wick stopped right here. The draw would have been this wick here, and it would have took out that wick and still dropped. So that's a mistake I made. That's why it's so important to study this stuff. I just missed the guaranteed move, and it fucking sucks. I mean, I got to figure out what I'm going to do, man, because I can't afford to do this kind of stuff. You know, I'm so happy and blessed that I do know exactly where price is going. I can't beat myself up on that. Let me go back to FP markets. I can say confidently, I know exactly where price is going, especially on US 30. So let's go back to the 15-minute chart, which is amazing to me if you understood how much I studied this. And, you know, and never thought I would really get it. So let's go back here. So let's zoom in. I'm about to end the video. These lines right here were predetermined. Like for instance, this is the Dillard's range that was set up before the weekend. This line right here, this blue line is before the weekend. So if you understand how this works, price is going to run in one direction towards the bigger price is going to run in one direction to where the inefficiency is. So right here, the inefficiency based on COT data and some other things was 1.9. The inefficiency here was 13.5. So see, I knew it would go lower, but I was thinking like, okay, well, maybe it's going to come out of here. Now, price was going down, but I knew it had to come back up to this bearish mitigation block. The drawn liquidity on the 4-hour chart was definitely here if you look at the candles. So I'm like, okay, well, we had a mitigation block on here that was respected. Right here, you see this right here? This mitigation block was respected because this 15-minute bearish mitigation block, price came right up to it, smacked it, and dropped. It couldn't even close above it. So maybe that's something I should have looked at, like, well, why did I think it was going to take out? Well, we just looked on a daily chart. So this right here was totally wrong. This was consequent encroachment. That red line right there is consequent encroachment of the Friday wick. Okay. Remember the little candle that closed inside of the huge bearish candle? So I should have known. I should have either went short there or 25% of that wick. But this is what messed me up. I thought the drawn liquidity was up here because I was just looking at a S1 drawn liquidity more than a S2 drawn liquidity, which is some things I came up with. So at least I know where price is going. That's the biggest thing. I identified this area down here as the glitch in the matrix. Okay. Also, another thing I should have known that usually if it's a strong glitch down here, price will not take out Friday's high. This has been very consistent. And it's something that I didn't look at because I was so sold on this is the glitch. This is the structure drawn liquidity. But that huge candle we just saw, yeah, that was my fault. So anyway, price, you know, if I could have went back, I definitely would have went short. So I would have went short right at consequent encroachment. Sometimes it'll come to 75% of the wick, because this is a wick right here on Friday. We're on a 15-minute chart, but this is actually a wick on the daily chart. So I would have went short here, and just been in drawdown if it came up here, thinking it's going to take this high up here and then drop. But it dropped heavily right down here to the glitch. This is the pre-identified. This is the big glitch. This is a glitch here. Okay, but when I did the numbers, they definitely was coming down here. Okay, and that's where we are now. And this is the big glitch. This one is 30, according to the COT data, and this one's 13.5. So I knew it was coming down here to fulfill the market structure needs of different order blocks and fair value gaps. And this is just something I got to deal with. I could have went short here, people. It would have came up here. I would have got scared, like, okay, well, maybe it is coming up here. And I would have did well. But here, I should have sold again in this retracement, because this is a price broke these highs. These lows here. It came back to retest. I probably would have thought it would have came up to here. I probably would have been waiting on that. But it came up to here and kept dropping. I should have sold again in another retracement. Put on more positions, knowing that it wouldn't come up to here. But it's news. This is definitely news right here. I have to take a look at this. So I missed this move. And I put right here feeling stupid, because glitch in the matrix shows that it will not take out a Friday high. But I believe strongly that the draw on liquidity, when I look back on it, it didn't make any sense. But thanks for watching.